This conference will now be recorded.
All right, we will get started. Thank you so much for joining our webinar this morning. Today we're going to talk about understanding your retirement plan audit. For those of you who don't know me, my name is Jenna Witherby. I'm one of the advisors on the team at 401k Plan Professionals. We focus 100% of our time working with corporate retirement plans, so serving both the plan sponsors who administer the plans and all of the individuals who participate in the plans. So today's webinar is a part of our webinar series where we talk about a variety of different topics. Today, like I said, is about 401k plan audits. We have 6 webinars scheduled this year. Of course, you can catch it live, but we also record it and we put the recording out on our website and on our YouTube channel to be accessed in the future. All of our past webinars as well are all housed online, so you can always go back and access that information. So today we have a special guest, and I'm going to introduce her to you. Her name is Carolee Lindsey. She's a CPA and a principal with Weber and Deegan in Edina, Minnesota, serving on their audit and accounting team. Weber and Deegan serves as the auditor for a number of employee benefit plans. Carolee has served as an instructor and a presenter for the Minnesota Society of CPAs on benefit plan topics, and she's an active contributor to the accounting profession. She also has performed peer reviews for other CPA firms, and she's a member of the AICPA Employee Benefit Plan Audit Quality Center. All right, thank you so much, Carolee. I'm going to pass it along to you, and we will get started.
Hi, everyone. Thanks, Jenna. I really appreciate the opportunity to talk about something my colleagues and I spend an awful lot of time on the spring and summer and fall. And we're going to start out just by talking about what an audit is and what it's not. And we're going to try to do this in 15 minutes or less. It's fun with audits. The employee benefit plan audit, what they are. I'm going to start out there. Audits are required by the Employee Retirement Security Act of 1974. What's called ERISA. ERISA has been around, since you can see, for a long time, and it's been tweaked a little bit, but not a whole lot. Generally, these audits are required for employee benefit plans of all types with 100 or more participants, and they are part of the 5,500 filing requirement. So they involve both ERISA, the DOL, and the IRS, as we'll talk about later. An important part of the safeguards that are put in place by the regulators includes these audits, and they are put in place, these safeguards, to help protect the plan participants. They are also a way to provide an independent third-party reporting to help the participants and the other stakeholders to measure and assess the health and compliance of that plan. What audits are not? They are not a way to avoid financial and fiscal responsibility. The auditors are not going to come in and find everything that's going on with the plan. That is plan management's responsibility, as we'll talk about in a minute. So we want to point out that it's also not something to take lightly. The DOL's focus on these audits has been ramped up in current times over the last few years, and as Jen and I were just talking about a little while ago, the fines are very hefty for non-compliance with the 5,500 rules and the ERISA rules from the DOL. The DOL has focused a lot on smaller plans as well, a lot of 401k plans, which are defined contribution plans, which most people are pretty familiar with. So first of all, we're going to talk about who's responsible. The responsibility for the plan financial reporting and everything about the plan rests with plan management. You've got a plan document that needs to be updated and kept in compliance. All the laws and regulations are out there. All of that responsibility lies with the plan management. You can hire, and you should hire and utilize internal parties to accomplish goals to meet these responsibilities. You know, a lot of larger companies may have human resources departments, financial accounting departments that can help with these responsibilities. I would also recommend for even a smaller plan, a benefit plan committee that can make decisions, the administrators. There's also, every plan generally has a third-party administrator or record keeper, and they could have a separate or could be the same company utilized as an investment trustee and a custodian. And a defined benefit plan would have an actuary. And we don't see a lot of defined benefit plans anymore. They're the older style pension plans. Most plans that we see today are defined contribution or 401k plans. So how can plan management protect themselves and the plan? One of those ways is you can hire a qualified, properly educated employee benefit plan auditor. That's only one of the ways. There are a host of other advisors, and hiring qualified, properly educated people who do this kind of advisory services, such as 401k plan professionals, Weber and Deegan. There's a lot of auditors out there. There are a lot of advisors out there, and we want to make sure that to point out that hiring just the cheapest is not really the best way to go. You need somebody that's qualified and educated. These plans are very complex, and you have a lot of choices to make, and you need some help to do that. Auditors 101. I wanted to put this slide in because I want to help you. I want to help everybody understand what we as auditors are required to do. And B, before we ever even touch the plan or get to the steps that we're required to do, and so that it might help you understand what the auditors are doing, what's going on when they're out there. Before we even come on site, we have to be knowledgeable about the specifics and the risks of the type of plan that we're auditing. Defined benefit or pension plan, 401k plans, health and welfare plans, or an employee stock ownership plan. We, as auditors, are engaged to audit and report on the plan's financial statements, which include all the assets and liabilities and the financial activities and other areas of compliance. And we are required to meet the professional requirements of our profession, and also the DOL's rules and regulations regarding auditors with regard to technical training and proficiency, independence, all the way down to understanding the entity and the plan and the risks of material misstatement. So you might ask why we're doing all the things that we're doing when we're doing this audit. This is part of a big reason why we have to have all of this education before we even set foot in the door at your place. There's a couple of different kinds of audits that we can perform. The ones that we normally do, the ones that people are most familiar with, are limited scope audits, which are not appropriate for the SEC Form 11K filers, which are public company benefit plans. ERISA does permit the limited scope audits, but only if you have an investment house, a broker, that will certify that the information is both complete and accurate, and those are on the investments. Thank you. In a limited scope audit, the auditor doesn't audit the investments, and that's typically the biggest asset. Sometimes it is the only asset that you have sitting on the balance sheet of a benefit plan. It's all the investments, and since those are held typically at a very large house such as Vanguard or LPL, the auditors for a smaller company plan wouldn't necessarily have access to all of the controls inside that brokerage house. So the IRS and ERISA have allowed us to do a limited scope audit. That means there are certain things that we do not do related to those investments, but there are a bunch of things that we have to do. We are required to test participant data, including allocation of the investment income to the individual participant accounts. We're testing contributions, all of the benefit plan payments, and the other information that wasn't certified by the investment house. We also test the timeliness of deposits, the eligibility of participants, and the match calculations if you've got a match calculation. So you wonder why these things take so long. There are a lot of participants in the plan, and we need to pick a good number of those participants and test all these things that need to be complied with. We're responsible for reading the plan document, any amendments, all of those things, long before we even pick a number of participants. And when I get back to when I said earlier about not hiring just somebody that is the cheapest, who will pick one or two participants to test, that is really not allowed. We need to have a higher number of participants because it is required under the rules and regulations. So also, even though we might perform everything, procedures on everything except the investment information, we also have to disclaim an opinion. So we'll put a report on there that says that we do not opine on these statements, but it is a report, and we would be responsible for determining also the conditions of that limited scope audit. And so the report is a couple of pages. It's disclaiming an opinion, but it is also mentioning all of the rules and regulations that we can do this under. So the other type of audit is a full scope audit, which we would test the investment valuations. We would go into the market prices of investments, for instance, and typically most of our 401k plans are not full scope audits. The DOL and the IRS, again, I have said that these are the rules and regulations that have to be followed. We are also required to read any documentation you may have gotten as a plan manager from the IRS. We will ask you if there have been any prohibited transactions under the DOL or IRS regulations. We would be asking if there were instances of non-compliance with any rules or regulations. And we would especially want to point out that we will be asking you at the end of every one of these audits to sign a representation letter that you have told us all of these violations, if you had any, or you certify that there aren't any. If anything comes to our attention, we have to apply certain extra procedures. So that's why we have to ask all of these questions, because we're also doing a load of compliance auditing. Wanted to make sure that I included some reminders about what plan management is responsible for, and it makes your audit go a heck of a lot smoother if you assign an individual or a couple of individuals, if you have documented all of your the selection and application of the accounting policies, all of the internal controls. If you can hand us documentation of all of these internal controls, including the internal controls related to your service providers, that will make your audit go a lot smoother. You'll be a lot happier client, and we'll be happier as auditors as well, because we can get it done and get out of there and let you get on with your year. We also recommend you have a written investment policy. These investment policies are important for your advisors. They need to understand what management's wishes are regarding the plan's investment goals. Few things to keep in mind. Independence rules don't allow us to do prepare financial statements for SEC clients, but we can help smaller clients, and we typically do help prepare the financial statements. We want to make sure the plan's records are up to date and complete. Consider whether there are adjustments that will need to be made to those financial statements. A couple other things to keep in mind: preparing the schedules and everything in advance, and reading your internal controller SOC 1 report before we get there is really, really important. And also, please arrange for the auditors to have direct access to other service providers so that we can ask them questions as well. And lastly, there's a list of things not to do, because we will find these as deficiencies, and they would end up costing you a little bit more time and money at the end of the day. And
all right.
that should be it.
Well, thank you so much, Carolee. That's such valuable information, and not all of our 401k plan clients require an audit, but many of them do. And we work with those that do, as well as those that are maybe needing to soon. And so having partners that we can rely on, like Carolee, is really valuable to us as 401k plan advisors. We really appreciate her time. So like I said, this will be recorded. The recording will be out on our website. It'll be out on our YouTube channel. If you're not a subscriber yet, go to YouTube, find us 401k Plan Professionals, and you can subscribe. That way you get a notification every time we have a new video. And thank you so much for joining. We really appreciate it. Please feel free to reach out to me if you have any questions at all. And if you have some for Carolee, I can send them her way as well. Our next webinar will be in June, so we hope you join us for that one. Thanks and have a great day.